Have you ever wondered how millionaires legally pay so little in taxes? Sometimes even zero. Well, today we're going to break down one of the biggest legal tax loopholes the wealthy use every single year, and I'll explain it in the simplest way possible. Welcome to Smart Realty Secrets, where we turn complicated money topics into simple strategies you can actually use. Now let's get right into it. When people hear the word loophole, they often think of something shady or illegal. But a tax loophole is just a rule inside the tax code, something that was intentionally put there by the government to reward certain behavior. And what behavior does the government want to reward? They want you to own assets, to invest in real estate, create jobs, and build housing. So here's the secret. The biggest tax loophole millionaires use is called depreciation. It's one of the most powerful and most misunderstood tools in the entire tax system. Depreciation basically means this. The IRS lets you write off the wear and tear on your property over time, even if the property is actually going up in value. Let's say you buy a rental property worth $500,000. The IRS says that building will wear out over 27.5 years. So every year, you can deduct about $18,000 as a loss, even if you didn't lose a single penny in reality. That deduction lowers your taxable income, and that means you pay less tax. Meanwhile, your tenants are paying rent. Your property is appreciating, and your cash flow is growing. So on paper, you might look like you're losing money, but in real life, you're actually getting wealthier. Now, this is where the wealthy take it to the next level. They use something called a cost segregation study. Instead of depreciating the entire building evenly over 27 years, they break it into parts like the roof, floors, wiring, and equipment. Some parts wear out faster, so they can deduct them over just 5, 7, or 15 years. That means a huge chunk of their investment can be written off right away. Let's put numbers on it. Imagine you buy an apartment building for $1 million. A cost segregation study might let you deduct $200,000 or $300,000 in the first year alone. That's money you keep instead of paying to the IRS. Money you can reinvest, grow, and multiply. That's why you often hear stories about billionaires and real estate investors paying almost no taxes. They're not cheating the system. They're just playing by the rules, smarter. Because the tax code is not about punishment. It's a roadmap that shows you exactly what the government wants you to do. And when you follow that roadmap, you get rewarded. So how can you start using the same loophole? Simple. You don't need to be a millionaire. If you own a rental property or plan to invest in real estate, you can start using depreciation right now. Work with a CPA or tax advisor who actually understands real estate tax strategy, not just basic accounting. Ask them about bonus depreciation and cost segregation. Even one well-planned property can save you thousands of dollars in taxes. And that's money you can use to buy more assets. Because at the end of the day, that's how the wealthy build their empires. Not by working harder, but by working smarter. They earn money, protect it legally, and reinvest it to grow even faster. So remember this. The tax code wasn't written to punish the rich. It was written for investors. And now that you know the biggest loophole they use, it's your turn to take advantage of it. If you found this helpful, make sure to hit that like button. Drop a comment with your biggest takeaway, and subscribe to Smart Realty Secrets for weekly videos on finance, real estate, and passive income. Because the more you learn, the more you earn.